Hi, I'm James Willing from Bell Commercial in the Northern Beaches, Principal Director, and this is...
My name is Lydia Smith, and I'm Sales Executive in Bell Property Commercial.
We're going to try to give you guys some good info, some wins, some losses, some things to target, some things to focus on. We're going to add value, listening. I think the real hotspot for property and commercial in the Northern Beaches over the next 12 months is really going to be the industrial properties. I feel like the changes to the superannuation funds, the self-managed superannuation funds, how much you can invest, how you can negatively gear it. Is finance a problem? Can you invest in residential rather than commercial anymore? I think really that sub $1.5 million industrial is going to be the hotspot. Do you find that there is a kind of a disparity between the investors and the owner-occupiers?
Yes, absolutely. I see that owner-occupiers are definitely willing to pay more at the moment. And I believe the gap is circa 10% between them. We tend to get yields around 5% maximum, industrial even below that, around 4%. So it's quite tricky sometimes to bridge that gap, but we still see a lot of potential in Northern Beaches industrial market, and some buyers are confident it's going to grow, and that projected capital growth is obvious to them, and they do tend to invest even that 4% certainty versus money in the bank.
It's really interesting because that historically has always been the mentality of a residential investor. You have a low return, low yield week to week, but you're aiming for high capital growth. And now with the changes to the self-managed super funds, because you really cannot buy, especially leveraged, you cannot buy a residential property and then that 1.5 to million less. The commercial, even though that disparity between investors and owner-occupiers is creating a gap, it means that gap is still something to grow. It's still something with capital growth, and you're still getting a higher return per week than you would if it was residential. I don't think the gap between residential and commercial is as much there anymore, because what used to be the focus of residential was capital growth over yield. Now that's kind of balanced out with commercial versus residential, but in the interim, you get the higher yield than you would in residential without the headaches of the regulation and legislation of residential tenancy. Yeah, that's a huge deal. And I feel like on the Northern Beaches, there's a lot of people who have run small businesses who need somewhere to be. There's always going to be a plumber. There always is going to be a carpenter. There's always going to be an electrician. These core services need a place to house their business. And where are they going to be? They're not working from home. Nobody after COVID wants to work from home anymore. I feel like that's the hot spot. I think over the next 1 to 2 years, maybe further, that the small sub $1.5 million warehouses are going to be in high demand, and for a good reason.
Yeah, we recently launched 2 warehouses within that range, and we see a lot of inquiries on those. And yeah, I totally agree with you, James. I do see that they're gonna stay in high demand for a period of time. I also noticed that there is not enough awareness about that you still can invest into your self-managed super fund into industrial. Some people just completely unaware of it, and they're like, oh, I haven't thought about it, or I haven't heard about it. And that's when we say, I think you should speak with your financial planner and an accountant to understand what your position is.
Yeah, it's a hard thing. We're not financial planners. We can't give financial advice. But for us, so many things are so obvious, but they're not aware yet in the market of what's going on. I mean, I only found out recently that on the 10th of August, you're allowed to exchange on a residential property in your super fund and gear it financially up until the 10th of August. So I don't think that the wave of inquiry has really even hit us yet, because that's not out in the market and nobody's that really aware of it. So I think if you're thinking about selling a warehouse, or you're thinking about getting into a warehouse, I think getting ready to launch it now, or potentially buying it now, is the best time. I think that there is how many residential investors that no longer can rely on that vehicle like they could previously. The negative gearing has been drawn back a little bit. Financing has been drawn back. The capital gains has changed as well. And it's all just pushing Australia towards investment in commercial property rather than residential, to grow your wealth, to grow your portfolio. I think for 100 years, Australians have grown off the back of their residential portfolio. a lot of wealth in Australia, the baby boomers and everyone like that has generated wealth out of their primary residence. That's still possible because that's something that is not as heavily taxed. And I think that the government, in my opinion, in general, is trying to push people towards their primary place of residence, PPOR, as a method of generating wealth. But I think that they're pushing people away from being multiple owners of investment residential property. But I think what they would love to see is that money flowing out of that stream into commercial property investment, commercial portfolios, supporting tenants who need somewhere to run their business but perhaps can't get the finance or can't get that 30% deposit required. I think that we're, fingers crossed, could be the time to shine for commercial property across the Northern Beaches for the next 1 to 5 years. And frankly, getting in now is a lot better than getting in 5 years' time.
I totally agree with that. I think we have this window of opportunities at the moment when there is still not enough awareness of the market, so we don't have that many buyers to compete against. So now is actually, I feel, a really good time to buy. And for that reason as well, potentially good time to sell, because the dialogue we use on a daily basis that if you get the property right now and the right buyer who is very motivated, the deal can be done quite quick.
With a good result. I think the last financial year, what it proves is that the office leasing in Northern Beach is extraordinarily strong, like extraordinarily strong. The North Sydney, the CBD, some of the rates that we're getting in the Northern Beaches, particularly in Manly, are extraordinary, upwards of 1,500, 1,800 per metre squared, 1,800 per metre squared, plus GST in little old Manly. Why? Because it's lifestyle. You can surf on your lunch break. You've got a plethora of beautiful restaurants to buy food at. Pop downstairs and buy the wife a birthday present. There's everything there in that precinct, the Manly precinct, for someone. And why would you cross the bridge? Why would you spend 45 minutes in commute when if you need to go to the CBD, you jump on a 15-minute ferry? I feel like that's the real core of the Northern Beaches growth in office will come from Manly, and it will probably push out the rest of the beaches. And, you know, underlying that is the huge amount of infrastructure and spending we're finding on high-end developments for residential in Manly. Some of the figures are just eye-watering, some of the figures in there, and it's not stopping. And the reason it's not stopping is what I just mentioned before. You can live and work in a community of just very, very high-end, beautiful, lifestyle-based, you know, place to live. Why would you be anywhere else? Northern Beaches, you surf on your doorstep, jump on a ferry to go to the CBD, waterfront. What's not to love? I think the development sites that we've put together recently, you know, I think from memory last financial year, we exchanged contracts on circa $100 million of development sites, and for a good reason. It's because that's where the development money wants to be because of what's happening on the Northern Beaches. There's specific pockets on the Northern Beaches which are still stacking up in terms of development, and I just don't see it stopping. There's certain pockets in New South Wales that are still viable, really good places to develop. Mossman's probably gone past that point now, in my opinion. I think that there's going to be a lot of stock coming up in the Mossman market for sale in terms of residential, whereas the stuff in Manly, because it's much more low rise, much less dense, the value is still there, the exclusivity is still there. If you're going to be spending $10, $15 million on an apartment, you want it to be exclusive. You don't want to be in a block of 40. A very large amount of the business we do is in Manly, whether it's sales or leasing. It's a market we really dominate. There's something about 70 or 80% of market share we have in the Manly market. And it's exciting. It's something that we created from the ground up, and we created it through relationships. We don't churn and burn. We don't just do a deal for the sake of doing a deal at the expense of a vendor, tenant, landlord, whoever it is. We try to have relationships to ongoing. We started the business with 10, 12 key landlords, and we grew that Manly market from servicing those landlords the best we could, placing good tenants, pushing rentals higher, but sustainably. What we don't want is tenants going in there, going broke and having to be replaced. It's no good for anyone. We're trying to almost single-handedly collate the retail offering in Manly so that it's more inviting for the higher-end labels. Higher-end labels come, more higher-end labels come. Residential people love to see the strip with the higher-end labels. Residential prices go up. It's all this big interconnecting web, and it's just super exciting to for a team of, what is there? There are 7 of us now, 7 sales and leasing agents. For us to be doing over 200 transactions a year out of 7, it's quite phenomenal.
Very excited for the next year.
Yeah. Standout sale, 47 the Corso, extremely low yield, 3.75%, 3.4% net yield, yeah, extraordinary. But that's the Corso. You know, values on the Corso go up by huge leaps each year. It's a kind of a residential-based investment model of capital growth rather than rental income. Having said that, you know, they still do produce a lot of income, but the value just represents the strip. It represents that really niche, low volume, tightly held market, and that's what represents in that price. And you've had some great results in some office warehouse, the small, you know, that owner-occupier versus investor mix in Brookvale?
Yes, that's right. We recently sold unit 43 and 44 at 49 Mitchell Road. The sale we achieved, it was 2.7 million on 305 internal square meterage space. So we achieved over $8,000 per square meter for that size. This is quite outstanding result for a starter unit. But the reason why we were able to achieve that result is that competitive market of owner-occupiers. Because from the investment point of view, that property maybe would generate below 4% net return, which is obviously it's not very appealing, but having that owner-occupiers competing against each other, we generated a really, really good result for our vendor.
It's another example of that owner-occupier market. And, you know, some people might say, oh, they've overpaid for it. Well, I don't think so. I think in 2 to 3 years, when the owner-occupiers keep chasing each other and keep pushing each other, the rentals, I feel like the sales values have moved. The rentals haven't caught up yet. And I think they've got headroom. They've probably got something like 20-25% headroom to move up. I had a really interesting interview with the fund leader in New South Wales recently, where his prediction was 30 to 40% statewide increases in industrial rentals. And that's taking into account the stuff out west, which is extraordinarily big in a different market. So maybe you settle back on 15 to 20% per annum in the Northern Beaches. It's still a huge amount of headroom in the rentals. And we're going to bridge that gap, I think, between yields and owner-occupiers. But for the owner-occupiers out there, it's the time to buy is now. I feel like it's only going to get harder as those rentals start pushing up. There's going to be more competition and you're going to be competing against investors.
Yeah, absolutely. Totally agree.
If there's anything more you'd like to know, whether it's leasing, sales, investing, development, whether you're putting a site together with friends, family, whether you're trying to just lease your little retail shop on Manly, just please reach out. We're here to help. We pride ourselves on helping people grow, whether it's their financial portfolio, whether it's their property portfolio, or whether it's just a friendly ear. Please give us a call. We're here to help and we'd love to hear your story.